Are you in the market for a new car but unsure whether to buy or lease? The decision can be a difficult one, with pros and cons to each option. In this video, we'll take a closer look at the financial and psychological implications of buying versus leasing a car, and help you make an informed decision. Welcome to the Finance Bowl, where we give simple money and investing tips. Buying as leasing a car is a question that has been hotly debated among car enthusiasts, financial experts, and everyday drivers alike. On one hand, buying a car provides the benefits of full ownership and the potential for long-term savings. On the other hand, leasing a car allows you to drive a brand new car for less money on a monthly basis and may offer more flexibility in terms of trading in for a newer model every few years. In this video, we will explore both sides of the argument and delve into the pros and cons of each option. We will discuss the 4 main ways to purchase a car, including cash payment, financing, leasing, and renting, and analyze which option is the cheapest in the long run. Additionally, we will examine the psychological factors that should be considered when making a decision about whether to buy or lease a car. By the end of this video, you will have a better understanding of the advantages and disadvantages of each purchasing option, as well as the factors that may influence your decision. Whether you are in the market for a new car or simply interested in the financial and psychological aspects of car ownership, so please watch the video till the end before making your decision. Main options for purchasing a car. When it comes to purchasing a car, there are 4 main options available to consumers. Each option has its own set of advantages and disadvantages, so it is important to understand them in order to make an informed decision. Option 1 is buying the car outright. This means paying the full purchase price of the car upfront and owning it outright. This is the most straightforward and simple option, but it requires a significant amount of money upfront. Option 2 is finance or hire purchase, which works like a personal loan. In this option, the buyer pays a deposit and borrows the rest of the money to buy the car, and then repays the loan with interest over a set period of time. This option can be more affordable in the short term, as the cost is spread out over several months or years, but it may end up being more expensive in the long run due to the added interest. Option 3 is lease or renting, where monthly payments are calculated differently than in finance. In this option, the buyer essentially rents the car for a set period of time, usually 2 to 3 years. Monthly payments are typically lower than in finance, but at the end of the lease, the car must be returned, and there is no ownership stake in the vehicle. Option 4 is PCP, where a term is set, a deposit is paid, and the company provides a final value for the car at the end of the agreement. In this option, the buyer pays monthly installments and has the option to purchase the car at the end of the term. This option can be more flexible than a traditional loan, but it also comes with the risk of unexpected costs at the end of the term if the car's value has depreciated more than expected. It is important to carefully consider the pros and cons of each option before making a decision. The cheapest option will depend on individual circumstances, such as credit score, down payment amount, and desired length of ownership. 3. Financial implications and costs of each option. Now we will discuss the financial implications and costs of each of the 4 main options for purchasing a car. For this comparison, we will assume a medium-sized family car with a value of $20,000, a 15% deposit, and a 3-year term to make it as like-for-like as possible. The first option is to buy the car outright. In this case, the full cost of the car would be paid up front, minus the 15% deposit, bringing the total to $17,000. This would provide full ownership of the car at the end of the transaction. The second option is to finance or hire purchase the car, which works like a personal loan. With an 11% interest rate, assuming the same 15% deposit, monthly payments would be $420, bringing the total cost to just under $34,000. However, at the end of the 3-year term, the buyer would own the car outright. The third option is to lease or rent the car, where monthly payments are calculated differently than in finance. Assuming the same 15% deposit, monthly payments for a lease option would be around $345, with no interest. This would make the total cost for 3 years approximately $17,000. However, the lessee does not own the car at the end of the term. The fourth option is PCP, which is the most popular option, but not necessarily the cheapest. With a PCP, a term is set, a deposit is paid, and the company provides a final value for the car at the end of the agreement. Monthly payments would be around $310, assuming the same 15% deposit, with a final balloon payment of $7,000 at the end of the 3-year term. The total cost would be approximately $18,000. not including any additional fees or charges. In summary, while buying a car outright may be the cheapest option in terms of total cost, financing or leasing may be more affordable on a monthly basis. PCP is a popular option, but it is important to consider the final balloon payment at the end of the term. Ultimately, the decision will depend on individual circumstances and priorities. But the financial aspect is just one part of the picture. We also have to consider psychological factors. When deciding whether to buy or lease a car, there are several psychological factors to consider. One of these is the emotional attachment to owning a car. For many people, owning a car represents a sense of independence and accomplishment. They feel proud to have something that they can call their own and can take care of. On the other hand, leasing a car may feel like a temporary arrangement, and the lack of ownership may not provide the same level of satisfaction. Another psychological factor to consider is the fear of commitment and concern over long-term financial obligations. Buying a car outright or through hire purchase involves a long-term commitment to paying off the debt. This may cause anxiety for some people who are unsure about their future financial situation. Leasing a car, on the other hand, offers more flexibility, as the commitment is typically for a shorter period of time. Finally, the impact on credit scores and future financial goals is another psychological factor to consider. Buying a car outright or through hire purchase involves taking on debt, which can affect one's credit score. This may impact future financial goals, such as buying a house or starting a business. Leasing a car, on the other hand, does not involve taking on debt in the same way and may not impact credit scores in the same way. However, it is important to carefully consider the financial implications of any car purchase or lease before making a decision. In conclusion, we have discussed the four main options for purchasing a car and their associated costs. Buying the car outright provides full ownership, but it may not be the most financially feasible option for everyone. Finance or hire purchase works like a personal loan and offers full ownership at the end of the term. Leasing or renting is an option that allows for driving a brand new car for less on a monthly basis, but there is no ownership at the end of the term. Finally, PCP offers the potential for lower monthly payments, but there are other factors to consider such as mileage limitations and the final value of the car at the end of the agreement. We have also discussed the psychological factors to consider when deciding to buy or lease a car, such as emotional attachment to owning a car, fear of commitment, and the impact on credit scores and future financial goals. Based on the analysis and personal circumstances, the final recommendation will vary. It is essential to do thorough research and calculations before making a decision. In summary, there is no one-size-fits-all answer to the question of whether to buy or lease a car. The decision should be based on a combination of financial and psychological factors, taking into account individual circumstances. We encourage you to do your research and make an informed decision that is right for you. Thank you for watching, and we wish you the best of luck in your car buying journey. If you liked the video, please subscribe to the Finance Bowl for more money and investing tips. Until next time.